Hello, this is Eric Parnell, Chief Market Strategist from Great Valley Advisor Group. And here we are. It's the beginning of August and the stock market is in correction, just like last year. So what is taking place right now in the markets and what should we reasonably expect going forward? Now, the first thing that's important to highlight is the correction that we're seeing take place right now is not unexpected. The stock market has had a phenomenal run going all the way back to Halloween of last year. And it was long overdue for a correction at this point. So the question is, now that the downside has begun, how much further should we expect markets to go to the downside before we find a bottom? The first point of reassurance is the fact that there is a lot of technical support for this market after such a strong run. Yes, we've broken through the 50-day moving average, but we still have support levels at the 150-day moving average and the 200-day moving average, as well as key support lines, like the low from April, as well as the previous all-time high going all the way back to the middle of last year. These are key levels that we typically see the market bounce. A second key point to highlight is the downturn that we've seen in recent days has been extreme. The emotions behind this downturn have been so dramatic that we're overdue for a bounce. A third key point to highlight is arguably the most important. Yes, the pullback in recent days has been dramatic, but it has only brought us back to levels that would have been considered all-time highs as recently as late May and early June. We're still in good shape. And when we take a look at the fundamentals underneath the market, we have a lot of reasons to be constructive through the remainder of the year. Despite some recent signs of weakness, the economic outlook remains solid. And more importantly, the outlook for corporate earnings growth remains strong. As we've gone through the second quarter earnings seasons, for example, corporations have upgraded their earnings outlook, not downgraded them. And that's important for rising stock prices as we go through the remainder of the year. Does this mean that we're out of the woods with the correction? Not at all. The correction that we've seen so far, it's been going on for about 3 weeks. And when you take a look at history, corrections that take place within bull markets, which are totally normal, last anywhere between 2 to 8 weeks, with declines anywhere between 5 to 12%. Right now, we're at about 9% in the recent decline, so it shouldn't be surprising if we see some continued market weakness and volatility through the remainder of August and even into the early fall. But the good news is that's part of a healthy functioning market, and it's something that we see in the midst of longer-term bull markets. So the key here, don't be reactive, remain patient, allow the markets to play it themselves out over time, and remain dedicated to your long-term investment philosophy and your long-term financial plan. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.